Hey everyone, Patrick Jackson with Mann Mortgage here with this week, July 21st market updates. It's about 10:30 on the West Coast, and we actually got some big news out of Europe today, where the ECB, which is the European version of the Fed, they increased their rate by half a point for the first time in 11 years. So congratulations to them. So keep in mind that prior to this, it was at negative 0.5%. So by raising it 0.5%, they're effectively at zero now. Their inflation rate is at 8.6%. So they definitely needed to take action. And, you could say that our Fed was a little bit slow to act over things, but we're at a 1.75. So, at least we're already there. So with that news, the stock market, started out negative and it has recovered and is slightly in the positive now. And then mortgage related stocks and bonds or backed bonds have all positively increased, as far as our stuff goes, and that is because, like we've talked about before, these Fed hikes or these rate hikes, in this case ECB, helps fight inflation. Inflation is what's bad for our rates, so we usually react positively when these rate hikes happen. So moving on, we got existing home sales numbers this week, which measures existing home sales, so homes that already exist. About 90% of the market, the other 10% would be new home builds. So these are important numbers. And, a lot of the media outlets have run with a certain numbers in these stats to paint a certain picture. And as usual, I feel like it's important for us to, take a closer look and we can see what these numbers actually show. So I'm going to bring my screen up here real quick for you guys. Oh. All right. So existing home sales. So we got existing home sales this is for June of 2022. So these are June closings. So these would be people, shopping in April and May most likely. So, our mortgage rates were already really high at that point. So that's one thing to keep in mind. So month over month, they were down about 5.4%, and year over year we're down about 14.2%. Again, different market than we were last year. Rates were a lot lower. Things were a lot different last year. So that's obviously explainable. Median home price is up 13% year over year to $415,000. First-time home buyers last year were about 31%, about 30% currently, and that's up from last month, which was about 27%. Cash buyers up slightly from last year, from 23 to 25% currently, and investors again up slightly from 14% to 16%. So, and then, one other thing to keep in mind with the inventory. So inventory, we had about 1.26 million units available this last month, supposedly. It's up 2.4% from last year and 10% from last month. So keep that in mind. I'm going to talk about that more here in a second. That's about 3 months supply nationwide. A normal market is considered 6 months. So we're not in any means in a market, a buyer's market currently. So 14 days on market is right now nationwide. Right now, from market to close, the time on market is 14 days. So that's actually a record going back to 2011 when they started tracking that. That's the lowest average time. So record pace as far as home selling. And then one other thing to keep in mind right now, currently less than 1% of all transactions, existing home sales are either foreclosures or short sales. So that backs up something we've talked about before, where the loan industry, loans that people have are a lot healthier than they were in the past. Record lows there. And again, that's being backed up by record levels of equity. So homeowners are in very good shape. So the next thing I wanted to look at, and one other thing to keep in mind, as far as a home equity appreciation, the Zillow home price index came out this morning, and, take it for a grain of salt, whatever you think about Zillow, but Zillow over the next 12 months, they forecast about a 7.8% increase in appreciation for the next 12 months. So that might be a little aggressive, what I think, or what MBS Highway, who I trust a lot, thinks, but still kind of shows what we've been talking about, more of a moderation in appreciation back to pre-pandemic levels, which tends to be, in that 4 or 5% range, where, Zillow is thinking more close to 8%, which would be awesome if it happens for homeowners. But so they're still predicting over the next 12 months, positive appreciation nationwide. So moving on to the next thing I wanted to show you guys, going back to that inventory part right there. So this is something I've shown you guys before. This is the last 10 years of housing inventory. And another thing, this 1.26 number, this includes pending sales, which we all know in the industry, and then about 600,000 of those are pending. So, most of those houses are going to close, or they have a backup offer, or whatever it may be. So that's not really 600,000 or so of those are not really available for, Joe home buyer to go and find right now. So looking over, so they're talking about, the number that some of the media outlets ran with as the sky is falling, we're going to have too much inventory soon, was the increase of 10% month over month, 2.4% year over year. So as you can see, going back 10 years, every year about this time, inventory jumps up. And the reason we all know this is because that's listing season. That's when people are looking to move. People want to move in, when their kids are out of school, they want to get them settled before the kids go back to school. So this time of year, we see an increase in listings. It usually peaks about the late summer and then drops back off. And as you can see on the graph, every year we see this hump. So this whole, we have too many, oh my God, there's too many, houses now available based on this inventory numbers. That happens every year. So don't let people try to use that number and throw it, and show it in every different way. So let me go back to myself here. So, what we can kind of take from all this is, we're seeing, houses that are priced correctly right now are still selling very fast. In fact, like I said, record pace level right now. The houses that are overpriced, people that are getting a little greedy, are the ones that are still sitting. And so those are the ones we're seeing the price reductions. So they're reducing back to probably where they should be priced to begin with. So like we've talked about before, that's a correction, not a crash. So as usual, if anybody needs anything at all, please do not hesitate to reach out. I'd be more than happy to help or chat about anything. Besides that, I hope you guys have a great day, and thank you so much for watching. Bye-bye.